Ethical investing is quite straightforward, really. It means you are choosing to put your hard-earned money into companies whose practices align with your personal values and beliefs. Think about what matters to you. Is it human rights, animal welfare, or perhaps fair labor practices? Ethical investors often decide to avoid certain industries altogether. These might include companies involved in tobacco production, weapons manufacturing, or those with poor environmental records. It is about making a conscious choice, ensuring your investments are not supporting activities you find morally objectionable. This approach empowers you to use your financial resources in a way that reflects your principles, which is a powerful thing. Sustainable investing, on the other hand, often looks at a broader set of criteria. It is frequently guided by what we call ESG factors. ESG stands for Environmental, Social and Governance. The environmental aspect considers a company's impact on our planet. Think carbon emissions, water usage and waste management. The social part looks at how a company treats its employees, suppliers, customers, and the communities where it operates. Governance refers to how a company is led, its board structure, executive pay, and shareholder rights. Sustainable investing aims to support businesses that are not just profitable today, but are also building a resilient and positive future for all of us. Now, you might be thinking, are ethical and sustainable investing the same thing? Well, they are closely related, like cousins in a large family, but they can have slightly different focuses. Many times they overlap significantly. A company with strong ESG practices is often also an ethical one. However, some investors might prioritize one aspect over the other. For instance, an investor might focus heavily on environmental sustainability, while another might be more concerned with the ethical treatment of workers. The beauty of it is that you can tailor your investment strategy to what you feel is most important, making it a very personal journey. It is crucial to understand that choosing this path is not about sacrificing financial returns. Far from it, actually. Many studies now show that companies with strong ethical and sustainable practices can often perform just as well, if not better, than their peers in the long run. These companies are typically well-managed, forward-thinking, and less prone to certain risks, like environmental fines or reputational damage. So you are not just doing good, you are also investing smartly. It is about aligning your financial goals with your desire to contribute positively to the world. A win-win situation, if you ask me. So, why should you even bother with ethical and sustainable investing? Well, first and foremost, it is about your own peace of mind and aligning your actions with your values. When you invest your money, you are essentially becoming a part owner of those companies. If those companies are involved in activities that go against your core beliefs, it can create a sort of internal conflict, no? Investing ethically allows you to feel good about where your money is going. It means your financial decisions are actively supporting the kind of world you wish to see, making your portfolio an extension of your personal principles. This personal satisfaction is a significant driver for many. Then there is the bigger picture, the societal impact. Your investment choices, when pooled with others, can send a powerful message to corporations. By investing in companies that are actively working to solve global challenges like climate change or social inequality, you are providing them with the capital they need to grow and make a bigger difference. Conversely, by avoiding companies with harmful practices, you are in a small way discouraging those behaviors. It is about using the power of capital to foster positive change, pushing businesses towards more responsible operations, and contributing to a healthier, fairer society for everyone. This collective action can truly shape corporate behavior. Now, let's talk about the money aspect, because that is important too. There is a common misconception that ethical or sustainable investing means you will have to accept lower returns. This is simply not true anymore, and plenty of evidence suggests the opposite. Companies that score high on ESG factors often demonstrate strong management, better risk mitigation, and greater innovation. They're often more resilient to unexpected shocks and are better prepared for future challenges. Think about it. A company that manages its resources efficiently and treats its employees well is likely to be a robust business, wouldn't you agree? Finally, investing in sustainable and ethical companies is about future-proofing your portfolio. The world is changing rapidly. Issues like climate change, resource scarcity, and social justice are becoming increasingly important, not just ethically, but also economically. Companies that are ahead of the curve in addressing these issues are likely to be the leaders of tomorrow. They are building businesses that are sustainable in the truest sense of the word, able to thrive in the long term. By investing in them, you are not only supporting progress, but also positioning your investments for potential long-term growth in a changing global landscape. It is a smart move for a secure future. When you start looking for ethical and sustainable companies, you will find they operate across various sectors. Think about businesses involved in renewable energy, such as those developing solar power solutions or wind farms. Companies focused on sustainable agriculture, promoting organic farming or reducing water usage, also fall into this category. Then there are firms dedicated to fair trade practices, ensuring workers in their supply chains are treated and paid fairly. In the healthcare sector, companies innovating for better, accessible medical solutions while maintaining ethical research standards are also good examples. The key is that these businesses integrate positive impact into their core operations, not just as a side project. It is difficult to name specific companies without it sounding like investment advice, which this is not. However, you can look for certain characteristics. Consider a company in the consumer goods sector that uses recycled packaging and sources its raw materials responsibly, or a technology firm that is committed to data privacy and has strong ethical guidelines for artificial intelligence development. Many well-known global brands are now making significant strides in sustainability, publishing detailed reports on their ESG performance. You are looking for companies that are transparent about their efforts and can demonstrate genuine commitment to making a positive difference in their respective industries. It is the underlying commitment that truly matters. So how do you actually find these companies or funds? One good starting point is to look for ESG ratings provided by independent research firms. Companies like MSCI and Sustainalytics offer detailed assessments of thousands of companies globally based on their ESG performance. Many investment platforms and financial advisors now also provide tools and filters to help you identify ESG-focused investments, including mutual funds and exchange-traded funds, ETFs. Also, take the time to read a company's annual sustainability report. This document, if genuine, will outline their goals, progress, and challenges in meeting their ethical and sustainable commitments. Look for concrete data and measurable targets. A word of caution is necessary here. Beware of greenwashing. This is a term used when companies make misleading claims about their environmental or social practices to appear more responsible than they actually are. It is important to dig deeper than just the marketing slogans. Look for evidence of real action, third-party certifications, and transparent reporting. Ask critical questions. Is the company genuinely committed, or is it just a public relations exercise? Doing your homework, or due diligence as we call it in finance, is crucial to ensure your investments are truly aligning with your values and not just funding a clever marketing campaign. The very first step on your green investing journey is to sit down and define your personal values. What specific issues are most important to you? Is it climate action, gender equality, labor rights, animal welfare, or something else entirely? Make a list. Understanding your priorities will help you narrow down your investment choices and ensure they genuinely resonate with what you believe in. For instance, if environmental conservation is your top concern, you will look for companies with strong environmental policies, perhaps in renewable energy or sustainable forestry. This self-reflection is a crucial foundation for making informed and meaningful investment decisions. Once you have clarity on your values, it is time to research your investment options. For many beginners, ESG-focused mutual funds or exchange-traded funds, ETFs, are an excellent starting point. These funds typically invest in a diversified portfolio of companies that meet certain ethical or sustainability criteria, spreading your risk. You can find information about these funds through online brokerage platforms or by consulting a financial advisor. If you are more experienced, you might consider investing directly in individual company stocks, but this requires more in-depth research into each company's ESG performance and financial health. Many online brokers now offer screening tools to help you identify such investments. You do not need a large sum of money like several leaks or crores to start ethical investing. Many platforms allow you to begin with small, regular investments. The key is to start, no matter how small. Consistency is more important than the initial amount. Also, remember the golden rule of investing: diversification. Do not put all your financial eggs into one basket. Even within ethical investing, try to spread your money across different types of companies or sectors to manage risk effectively. This approach will help you build a resilient portfolio over time while staying true to your principles. Finally, commit to continuous learning. The world of sustainable and ethical investing is constantly evolving. New standards, research, and investment products are emerging all the time. Stay informed by reading financial news, reports from ESG rating agencies, and articles from reputable sources. Consider following thought leaders in the space. Some good general resources to learn more include websites of organizations like the Global Sustainable Investment Alliance, GSIA, or looking into research from firms like Morningstar that evaluate ESG funds. A financial advisor who specializes in socially responsible investing, SRI, can also be a valuable guide. The more you learn, the more confident you will become in making impactful investment choices.